Welcome back to the channel, everybody. I am Mick Alphaname. The trillions are coming. Didn't I tell you? I told you. Have you seen the articles today? We have a lot to cover today. Whew, my word. And we're going to have another potent members only video. Yeah, there's a lot of good information coming out today. It's scary that I say about 98% of the things we've been talking about are coming true. They're confirming it. They're complaining. And we just got clarity. Oh, yeah. Oh, yeah. So now let's begin here. I hope you're all having a fantastic day. Saturday. Hope you had a little bit of fun, got a little bit of love. So this article here is from CryptoTicker.io. And it's titled, "Can XRP market cap flip Bitcoin?" Listen, I love it that they continue to make these comparisons. Not necessary. XRP is worried about XRP. XRP holders worried about XRP to XRPL. We're not worried about market cap either. We need that utility to kick in. These markets are for the taking. We're talking trillions solidly. And that's across all the bank coins, by the way. They all have this opportunity. It's just about executing. Nostro, trillions. Tokenization of everything, trillions. B2B, trillions. Central bank money, trillions. B2P, trillions. All we have to do is take a little bit of that. Stay focused. Focus is everything. And we're right there. Like I said, if you're keeping up with all the news, not just crypto news, you see what's happening, but don't worry about it. We're going to get into some of that today. We have multiple chapters, of course, but in that members only section, oh yeah, it's about to be a potent video. This is a good one. I think they're all good. This is a good one. Mark my words. We found something. So now, this article goes as such. If we consider the current price of XRP, it would need to rise by a factor of around 730 times from its current price to match Bitcoin's market cap. Once again, I'm not concerned with that. I think XRP is in its own lane. Not concerned with market cap at all. I think sky's the limit for XRP, right? Just depending on what's issued on chain. And I think right now we're hungrier than ever. The company's building on the XRPL, and it's a currency. And not only that, all we have to do is issue infrastructure. Just issue the infrastructures. Let them buy the XRP off the open market, just like central banks do gold. Just like I do gold. And if we're issuing infrastructure and they can buy it off the open market, boom, 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 bang, bang, bang. This could happen at any moment. I think that's the wise route to take. And what has been happening on demand liquidity is spreading rapidly across the globe. We're going to take a chunk of those trillions. It's not a matter of if, it's a matter of when at this point. And then if we take trillions, what does it do to that price? You tell me. Oh yeah, it's looking real good. But let's continue on with this article here. It says, that would mean XRP would need to reach a price of approximately $570 per coin. A lot of people think that's going to be easy when the time is right. I just want to put that out there. I'm not saying I agree. I'm not saying I disagree. I'm saying a lot of people believe that's going to be easy when the time comes. You ever heard of the 589 Club? Hey, a lot of those individuals from the 589 Club were right for a long time. They knew. Listen, like I said, there's some of the most brilliant minds in the XRP community. If we stay focused, we're on the cusp of something that has never been done before. We already set a historic precedent. But it says XRP would need to reach a price of approximately $570 per coin. However, and then it says this simplistic calculation. This is a simplistic calculation and doesn't account for potential changes in circulating supply of XRP or Bitcoin. Wait, listen, once again, no need to compare. Bitcoin people, let them make their money. All the best to them. Stay focused on XRP. Once again, look at all of the trillions we can access. Payroll is going to be something important that will be rolling across XRP. Then now with clarity and how many banks we're working with, who's going to trust anything more than XRP? As far as digital assets, I mean, listen, you have assets shoulder to shoulder with XRP, XLM, Algorand, but I mean, more than XRP? No, they're all equal. But other than that, there's nothing going to rise higher in respect versus the bank coins. So all the big companies in the future will be gobbling them up. They'll scoop up all of them, buy as much as they can. Why would they not? Just once again, just like gold, silver, palladium, platinum. And as that price rises, they'll become more and more respected. That's just the way that it goes. And I believe a lot of individuals will also use it as a store of value. There will be acceptable volatility, no different than gold. Gold bouncing between $1,940, $2,000, or platinum bouncing between $940 and was it 1,100, something like that, right? No different than that. We're getting there into the big leagues now, the serious business. So now let's move on here. So this article here is from zcrypto.com and it's titled "The Good, Bad, and the Complicated from the SEC versus Ripple Verdict as Bulls Envision $10 price." Yeah, listen. Well, let's read this little tidbit here. It says, XRP bulls are rubbing their hands in glee at the resurgence of the token after Ripple Labs scored a win against the U.S. Securities Exchange Commission. On July 13th, the court ruled, well, we know about that. Let's skip that little part there. The judgment was accompanied by a mass hysteria by the community that buoyed the asset to a 52-week high of 88 cents. I could have sworn it was like 93 cents. And I think my brother told me that. I saw it at, like 90, I think it was like 90 cents, 91, something. I don't know. I could have sworn it went higher, but it says 88 cents. Anyway, it says the value spike translate to a near 70% spike for XRP as bulls anticipate the asset class reaching $10. I don't think it would be that difficult to reach $10. All it takes is a few banks to start running capital through XRP, using XRP as a bridge currency. We have multiples of banks already lined up to begin at some point. It doesn't take that much. Or a major announcement. Listen, a major announcement, I think, could surge that price to $2. I feel that we will blow past $1. We went pretty high in one day. A major announcement, I feel, could get us either to $2 or close to $2, but that's just my humble opinion. All right. I could be wrong. But that's why people are anticipating $10 because the catalysts are all there. So it says here, regarding transaction volumes, XRP has been a beehive of activity, recording over $10 billion in volume, a staggering 70% in under 24 hours. A contributory factor. Let me pause there. I'm going to pause there for a moment, if you would permit me. I think XLM is the same thing. I've read these articles, and I may have one here about XLM. All XLM would need is a major announcement of it's a currency, right? It's a currency. And now the XRP has been declared a currency. There's no way that XLM would not be declared a currency as well. So that brings clarity to both of them clearly, in my humble opinion. All it would take is an announcement, a major announcement, and that price would skyrocket for XLM. I think we're going to see some interesting things in the next year or two. I really, really do. Because now there's not a lot holding companies back from building on the XRPL and using XRP, or building on Stellar and using Stellar Protocol XLM like there was before. Yeah, I think we're going to see some interesting things. It'll take a little bit of time. This article is from bncrypto.com. And it says, what are the odds XRP price hits new all-time highs after Ripple win against the SEC? So this section here says, can XRP price reach a new all-time high? It says, similarly to the daily time frame, the weekly outlook for the XRP price also shows bullish development. The price has broken out from a long-term descending resistance line that had been in place for 700 days. This supports the legitimacy of the breakout from shorter-term daily time frame. Also, the weekly RSI supports legitimacy of the breakout since it is above 50 and increasing. As outlined prior, the XRP price currently trades above the 80 cent horizontal area. While this is more than 250% below the all-time high of $3.30, however, it is worth mentioning that if the price manages to clear this level, the only other resistance before the all-time high will be at $1.70. That's not that far. Once again, at any moment, a big business, a bank, central bank, a commercial bank could begin using XRP. And that could drive the price through the roof. Or there could be an announcement. These are the things we're watching for, catalysts, right? So now, and I think there's some catalysts coming. If not, look, there's big catalysts, there's small catalysts, there's some massive catalysts coming, and it seems like they may be coming sooner than expected. So now let's move on here. And I think, given time, I think XRP is going to shatter its all-time high. Just my personal opinion. Let me know what you think. So now, this article is from U.Today, and it's titled, Ripple CEO says recent ruling was complete loss for SEC, not a split victory. Let's see what he has to say here. It says Ripple CEO Brad Garlinghouse maintains that the recent court ruling represents a complete loss for the SEC and not a split victory. Garlinghouse made these remarks in response to Fox Business correspondent Charles Gasparino, who hinted at a developing story on potential fines by Ripple to settle the part of the SEC case it lost. The Ripple CEO maintained that the SEC lost on everything that matters, as several lawyers have noted, not just Ripple's. He added that any attempt by the SEC to paint the recent verdict as some sort of split victory is pathetic. It says, they actually have the tweet here. It says, this from Brad Garlinghouse, and it says, Charlie, happy to come into the studio anytime to discuss the facts. Any attempt by the SEC to paint this as some sort of split victory is pathetic. They lost on everything that matters. It says, to your question here about potential penalties, that's up to the court to decide, not the SEC. This is what I was saying the other day. You very well know this case was never about fines or penalties. It was about establishing the non-security status of XRP. We won, they lost. I appreciate that, Mr. Garlinghouse. Keep that fire in your belly. It tells me that you're hungry, and now it's time to play. That's exactly what it tells me. So let's move on to another article here. So now we get into a little bit of XLM news, the sleeping giant. This one here is from coinjournal.net. We're going to skip a whole lot here. It's titled, XLM price soars as Stellar Rise ripples XRP wave. They always move together. They have a close relationship. This is with XRP likely to see a fresh burst in the next few days. Upside momentum could cascade into XLM. It definitely will. It definitely will. Look how they both went up. Now, I'll put this out there. Imagine XRP making it to $2 and then $3. Where does XLM's price go? People were already in profit, because they had sold a long time ago. They bought in at a low. They were already in profit with this last burst from XLM. Can you imagine? It goes up to 40 cents, 60 cents, 70, 80 cents possibly. They'll be making disgusting gains. And I know some people want it much higher. Everything happens in degrees. I'm just talking short term. That's it right now. I'm just talking short term. But as XRP rises, XLM will rise as well. And once again, now with a bit of clarity, there's no telling what announcements might be made that could definitely boost that price. But we'll see. I mean, there's no guarantees, but we'll see. I personally feel they've been sitting on announcements for a long time. This gives them way more leeway to play and make deals with companies and set up infrastructures and do things that they probably would have been a little bit more timid to do before. Now they don't. Everyone's getting fired up to play. Right? So it says here, if XRP price rallies higher above $1, it's likely Stellar's native token will target 24 cents and above that. 40 cents. On the downside, the main support remains at 7 cents. Let's not put negative energy out there and even think about that. Yes, so I agree with that. As XRP price goes up, XLM, it happened in the last bull run. They were directly tied. No matter what else was happening in the industry, right, in the market rather. When XRP went down, XLM went down. And when XRP went up, XLM went up. I watched it. I used to watch the charts like every day back then. I think it's something a lot of people do when they first get into the industry, into the market. So now let's move on here, right? And I'm gonna tell you what else. A little bit more XLM thoughts. I think a lot of companies are going to start scooping up stellar-based products now that this has happened, and there's a little bit of clarity in the crypto market. I really do. We have Wisdom Tree, Franklin Templeton, United Nations. I think we're going to see some interesting things that this next coming year that definitely could impact the price of XLM. No guarantees, not financial advice. I'm not a financial advisor, just my humble opinion. But if we did that well before the the XRP victory, what can we do now? So now we're going to move on to here, another article. Now, this is where we're starting to get a little bit deep. All right. New financial system coming in hot. This is one of the catalysts. It says here, this is from dailyhodl.com. And the article is titled, Central Banks Warn $1 trillion Debt Hammering the US Dollar. Haven't I been talking about that? I think about 3 videos back, I was speaking about this. The huge US debt and global debt and how it's a problem. I've continuously had people tell me US debt is not a problem. Well, now the central banks are telling everyone. Let's read this little tidbit here. People better prepare. All right. Now, this bodes well for the new financial system and bank coins. This is the legacy system collapsing on itself. Central banks around the world no longer look at the US dollar with the same certainty they did just years ago, according to a new survey. Now, take this number in, right? Institutional asset manager Invesco, so it's very reputable, surveyed 57 central banks. That's mind-blowing. 57 central banks, and found they're concerned America's behavior, United States, on the geopolitical stage, plus its surging debt levels, are threatening the reliability of the dollar. They're saying the same thing that humble Alphanim has been saying for years. And a lot of people told me, oh no, Alphanim, you're wrong on that call. Well, it seems the central banks think that I'm right. It's not about being right or wrong. It's about sounding the alarms. So that way, if people feel like, hey, I need to protect the value of my capital, they can. And they have enough time. This is not advice at all. You do what you want to do. But they have enough time to find something that they trust that can protect their value, whatever that's going to be. There's a lot of different options, a lot of good options out there. That's up for them. But at least they have an opportunity to consider what is coming. 57 central banks. And this is all while they accumulate massive amounts of gold. Let's keep going here. I want to see if they say a little bit more. It says the U.S.'s treatment of redacted in reaction to the country's conflict with redacted. They always reference that. Let's skip that little part there. It says, while very few actually see a world where the Chinese yuan becomes the world reserve currency, central bankers are still expecting to increase their renminbi holdings over time. Listen, that's not. They're sort of pointing this way while they're going this way. Everyone knows, and they have already spoken deeply about the common currency that's coming for the BRICS nation. That is the threat. That is the problem. And they're trying to back it with gold. This is why all the central banks also have been accumulating gold. So that when they come out with their digital currencies, there can be gold equivalency. And then when using the new financial system, there's equal flow back and forth. No fiat, no true fiat anymore. All gold-backed digital currencies. Even if they use them just within their own close ecosystems, and then, for interbank payments across the new financial system using things like XRP, XLM as bridge currencies. It's about to get major, folks, in the next few years. This is what people need to be looking at. This is what's going to drive those prices up. For the bank coins, liquidity, they're going to need it. Transparency, they're going to need that as well. Traceability, because the two sides don't trust each other. They're going to need us. And now we have a little bit of clarity. We can run. There's almost nothing holding us back. This is a major catalyst. Let's keep going. It says, Invesco's report also found that central bankers believe that gold is another asset that has become more attractive now. Yeah, I expect that gold price to go through the roof at some point in the next, I'll say in the next year or two. It depends on how fast everything collapses. If those banks go down within the next year, you'll see gold's price explode. Yeah, Bitcoin might go up a little bit as well, right? Silver will go up a little bit. So I agree with that. And I'm going to continue to stack my gold. I'm pretty comfortable right now, but I'm going to continue to do, that's just my way. I'm just putting that out there, right? It says, quote, a substantial percentage of central banks are concerned about the precedent set by U.S. Okay, so why did they do that? They reiterated the same thing from the top. So now let's move on to another article here. I want to put all these things, I'm giving you pieces of the puzzle here. Put them all together. Now, this article is from, this article is titled, Mexico will see a mass exodus of Americans if the dollar continues to fall against the peso. Now, I said this before, and a lot of people in the comment section didn't believe it. It says here, renowned financial guru, so it's reputable, renowned financial guru and North American influencer, Joaquin Omada, drops a massive bombshell on his audience. The escalating value of the Mexican peso versus the ailing, and that's really key, the US dollar value going down. The ailing US dollar threatens to spark a dramatic escape of Americans residing in Mexico. Redacted era expats are already feeling the squeeze as their living expenses skyrocket, an eye-watering 35% since 2023 kicked off. With the dollar's persistent slump and soaring inflation, the end does not seem to be in sight. So you see? So the dollar's value already is decreasing in different areas around the world. That's what I'm trying to convey. And the reason I keep an eye on that, once again, is so I can protect my value. I like to do whatever I want, come and go as I please. But I need to know that my capital is sound, that the value is still there. So if I can't trust the US dollar, I have to have something else to hold that value, but still be able to spend it as though it were a dollar, just as easily. I mean, and so keep your eye on the dollar's value, United States debt, dollar dumping, common BRICS currency. These things are important for the future. All right. So now we're going to go on here to another article, another piece. I'm giving you pieces today. So now, these types of things here affect the value of the dollar. So this is from NDTV.com, and it's titled, RBI, UAE, central banks agree to set up payment systems in local currencies. Now, number one, who's deep in the UAE? XRP, Hedera, and I think it was Stellar or Algorand has some connections there. Which one was it? You guys remember? What was it? I can't remember. It's one of them is in there, but I know XRP and Hedera are deep in the United Arab Emirates. And really in the entire MENA region, to be fair. But let's read a little tidbit here. It says, Reserve Bank of India and Central Bank of UAE on Saturday signed 2 agreements in Abu Dhabi to establish a framework of cross-border transactions and local currencies and interlinking of payment and messaging systems. The agreements were exchanged between the 2 governors in the presence of the prime minister. The memorandum of agreements or memorandums of understanding, MOUs, are establishing a framework. Sorry about that. There was a pop-up here. Establishing a framework to promote the use of local currencies like the Indian rupee and the UAE dirham for cross-border transactions and cooperation for interlinking their payment and messaging systems. India has been promoting cross-border transactions. And now when it comes to India, who's deep in India? Stellar, Algorand. You see how it's all coming together rapidly. People aren't seeing this. They aren't seeing it. They think that first little explosion after the case was it. It's not. There's a big future ahead. I'm sorry. I don't know why I said it like that. There is a big future ahead. Just my humble opinion. All right. It says the MOU on establishing a framework for the use of local currencies for transactions between India and the UAE aims to put in place a local currency settlement system. And this is where everything is heading. Local currency, everything but the US dollar and US based systems. Times are telling, right? And like I said, in that members only video that I'm going to make right after this one, I'll either post it tonight or tomorrow morning. Wow. They're telling. Now, this article here is from forexlive.com and it's titled, Fez Waller says he is in favor of raising the Fed funds rate at July FOMC meeting. Right? So let's scroll down here. They have a bunch of bullet points. Let's just read them off. So first bullet point says favors raising rate at the July Federal Open Market Committee meeting. Then it says second bullet point, increasingly confident banking stress won't derail economy. That's okay. If that individual saying that, that's how they feel. But if he were to say it outright, that's a lie. It would be a body blow to the economy, just like it was before. People pulled their money out. They had a flight of dollars coming out of the banks. They didn't know what to do, right? They're still bailing those same banks out and even more right now. We covered that a while ago. Billions. But let's keep going. It says here, next bullet point, Fed likely to need 2 more 25 basis point rate hikes this year. Then it says here, I don't trust any of their data either. The way that they segment it, and present it to the people, I just don't. Just personally, I just don't trust their information. Prices are still dramatically high. And once again, people can say, well, that's price gouging. I suppose. Wages, although wages are higher than in the past, that's not a comparison that should be made, in my humble opinion. You have to compare wages to the prices of the cost of living today. And even though the wages are a little bit more elevated than in the past, in comparison to the price of living, a lot of younger people, I would say mostly younger people, they're struggling right now. And you can tell, you see the articles written all the time on their struggles. They're being open with it, right? And a lot of these individuals, as they're going down, their expenses, they don't have a lot of expenses. So I hear a lot of the arguments like, well, they're spending too much money. Not these ones, right? And I'm going to assume that these reporters who are researchers, a lot of them, are doing their homework about looking at receipts and accounts and stuff like that to make sure that their articles are written properly. So, so I'm keeping that in mind as well. Something is rotten in Denmark when it comes to this information, right? So anyway, let's continue on here. It says, next bullet point, cooler CPI data is welcome, but need to see if it's sustained. Next bullet point, inflation has shown false dawns before. Next bullet point, banking sector is strong and resilient. That's mind-blowing. How could they say such a thing? They just had a major hack on a lot of the banks a few weeks ago. They buried those articles and buried that information, right? What else? I'm getting the TD Ameritrade hack that just happened mixed up with the banking hacks. Oh, and that's right. Then you have over 900. Well, that just happened. Then you have over 900 of the banks still at risk because of commercial real estate. How is the banking sector strong and resilient? I just don't understand that. Let's continue on here. It says, while job market has slowed, it remains very strong. Then it says here, that's once again, that's also iffy. So you have all this quiet quitting going on. You have this war going on with between the companies and the employees for the return to work situation. Some don't want to return, some want to return. Some people are walking away from jobs. So it's, you see, you need the little details in order to really make an assessment of this. What I'm looking at an economy that's in shambles, right? And still needs a huge amount of repair. But that's just my humble thoughts. It says here, monetary policy changes are moving through economy more quickly. I guess, okay. All right. I mean, they're trying to force them through, but they don't have a choice because they've made so many mistakes. So you have to you wait until the last second. The ship has a bunch of holes in it. And what I see is, even though you're patching up the holes, you're doing it with duct tape. You're just running around putting as much duct tape on holes as possible, which slows down the flow of the water and the sinking of ship maybe just a tad bit, but it doesn't do the job it's supposed to when you properly repair it. So what you're just running around forcing everything through now. It's not a true solution, but we all know that, right? Next bullet point says bulk of past rate hikes already have impacted economy. Debatable. Says here, next bullet point, fighting inflation remains main goal. Fed will succeed. No, that's not the main goal. I disagree with that respectfully. I think you're torn between fighting inflation, doing what you need to do, and then carefully caressing the markets, especially the ones the banks have an interest in, their clients have an interest in. Caressing the banks, helping them, because you can squash them, you make or break them, and the economy as well overall. And you don't want to be blamed for everything. That's why you're slowing down the rate hikes. So now it says jobs, economic strength gives the Fed space to hike further, I suppose. So now let's move on here. All right. So we're going to close out with some housing market news and gold. So now this article here is from money.com and it's titled, Will Home Prices Drop in 2023? So it says the spring home buying season has come and gone. And while it wasn't a complete bust, it certainly didn't meet projections real estate professionals had hoped for. Looking ahead to the rest of the year, housing experts are revising their early forecast for the 2023 market to reflect a less rosy view. The question on everyone's mind is the same. When will things go back to normal? So now let's scroll down here, see if they say a little bit more. It says no one expected home sales to keep up the torrid, redacted pace over 5 million homes sold annually. Experts' initial forecast for 2023 predicted sales would drop between 7% and 16% from last year, with mortgage rates staying well above 6% and seemingly on their way back to 7%, and more buyers staying on the sidelines because of the lack of affordability. These forecasts hit the nail on the head. Quote, the second half of the year is shaping up to be fairly boring with very little prospect of sales shifting up or down through the rest of the year, unquote, says Taylor Marr, Redfin's deputy chief economist. The expectation continues to be that home sales will decrease to an annualized pace of between 4.2 million to 4.5 million homes, or about 16% below 2022's pace. The one bright spot in the sales department is new construction homes. The supply of existing homes is low, so home buyers are increasingly turning to new builds. Plus, builders are offering several incentives from rate buy downs to price discounts that make a new home purchase more attractive and affordable. We're going to end off here because then they have another section about mortgage rates. According to U.S. Census Bureau, sales jumped by more than 12% between April and May, the third consecutive month of increasing sales. Compared to May 2022, sorry about that. Sales increased by a whopping 20%. Then it goes to the next section. We'll just read that first sentence. It's titled Mortgage Rates. When mortgage rates dropped to 6.09% in early February, there was a high hope they would continue to move lower or stay in the low 6% range. Some expert forecasts said rates would climb as high as 7.4%, but a few predicted they would fall to around 5.5% by the end of the year. So we're going to stop right there. Once again, that's on money.com. Make sure to check them out to read the rest of that article. They're doing great work over there. So now we're going to end off here with a little bit of gold news. All right. Oh, man. So this is from kitco.com and it is titled Gold Back to 2100 in a Hurry. All right. It says, let's scroll up here. Why does it begin like that? It says, I expected resistance at the 50-day MA in gold, but instead spot gold is consolidating above that mark this morning. Can sideline participants still pull back to the low 1940s, mid 30s from here? Sure, but if you are a stacker with sights set on all-time highs or more, you'll have to decide whether it's worth chasing the price up instead, in my opinion. So then they have a few very, very nice charts here. It says, without overloading this post with charts, that's funny. The triangle I showed in S&P futures is breaking to the upside. I see no reason to short or sell longs thus far. I'm a long-term investor in gold. Let's just put that out there. So I'm going to stop there. The future of gold is very bullish. You have all the catalysts there. There's so many different economic problems, so many geopolitical issues. You have banks at risk. The banking sectors around the world are under stress. All of this bodes well for gold. Central banks stacking gold. You have a lot of regular individuals stacking gold as well in preparation for the decline in not just the US dollar, but a myriad of fiat currencies are going to massively decline. And a lot of people are going to want to protect their value. So that recently, I believe in India, there was something going on there. And a lot of people retreated to gold to protect their value until they can move over to whatever it was like a new currency, or they were doing away with a certain particular paper tender over there. I believe that, don't quote me on that, but I believe that's what it was. So I can see that happening in various degrees around the world over the next year or two, possibly if they continue forward with moving towards digital currencies and thus the devaluation and sometimes the complete riddance of their paper legal tender. Then gold prices definitely can be impacted. But that's something you have to just watch for. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.